What is going on, ladies and gentlemen? I'm back doing a review of 5 students' trades that people randomly send me throughout the Discord, and I'm going to be going over them, critiquing them, just giving my thoughts on them. And yeah, without further ado, enough talking, let's get right into it. Setup number 1. Let's get right to it. So this setup is really good at, first glance for me, okay? I'm assuming this black line down here is probably a sell side, and I'm assuming this is an hourly fair value gap. And, at first glance, I do like this setup. Now, it ends up being a loser, and I do remember this day, and I remember talking about this play. So, basically, this play mechanically would be an A+ setup. It looks like we probably, I'm assuming, swept some sort of liquidity to the left, and we were delivering out of an hourly fair value gap as seen here. So mechanically, it's A+. Now, I talk about something called the external and internal fair value gap. And basically, this is one of those scenarios where I think is very key to know. So we have a fair value gap right now here, which held price down twice, where we tick into it, gets shot down. Tick into it, gets shot down. And right above that fair value gap is trendline liquidity. So I do like that. The problem with this one, and the reason why I didn't like this one, was because it's so late in the session and it's after 11 o'clock, where this is an example where sometimes I will take the internal fair value gap, which this would be it, hoping that we break the external. But, this setup being after 11 o'clock, it's so late in the session where in this situation, I'd wait for this external to break and then do a stop loss below this external and then target the LRLR. Because to be honest, the fact we got shot twice down, shot down twice by this is super obvious. And this, to me, especially this late in the session, is not convincing enough that we will run this trendline liquidity. To me, what will tell me that we'll run the trendline liquidity is if we break the gap right before it, if that makes sense. Also, another signature price I see here is a massive smart money reversal at the top here, which that looks like the start of a market maker sell model. You don't really get the signature price a lot, but it's super bearish, and you got to be careful longing really soon after we get one of these. Likely, if we get this at the start of the session, the rest of the session will be bearish. It's just something that I've kind of noticed. But it's not a bad play. It's not a bad loss for sure. But this late in the session, I'd wait for the gap holding down price before the trend line to break. Okay, not the gap here, because this tells us we're going to go to this gap, and then I don't really know if this gap's going to break, if that makes sense. So the second setup one of my students sent in was this 15-minute setup from Thursday, the 14th of August, okay? And this ended up being a loss, it seems, and at first glance, again, I think this is a great setup. So if we go in the replay mode, you can kind of see here would have been the entry. We tapped into a 15-minute here, and, it looks like we tapped into a 15-minute down here, meaning this low is likely protected. So yeah, just overall, great signature and price. Okay, my thoughts on this. 2 things. 1, the target's horrible, okay? It's a great pattern play, but the target is absolutely horrible here. You were targeting a high that took out all this liquidity here, okay, like this giant zone of liquidity here, and you have almost no trendline liquidity above that, we're going to likely break. Like usually if we sweep out liquidity for like a high day, or we've already made a new high day, which this would have been the new high day right here. The only way I like to retarget the high day is if we form trendline liquidity like this and then go down. But because this buy side swept out so much other buy side and did not create any engineer liquidity at all, I don't really like a setup to this because the targets just suck. Okay, they're horrible. There's no good trendline liquidity. We already swept buy side. And the other thing about this is it's way too late in the session. This occurs at 11:55 when we already had a data high here and we already hit it. So last Thursday the 14th at 9:12 a.m. in my private group, okay, which is $100 a month, I noted the data high and I said, want this data high. That's all I said, 9:12 a.m. And, I ended up getting a trade to it and the target was smacked. Now, when I want that data high, that's my AM objective. Once that's hit, I told everyone I'm not looking for any more trades once that's hit, because you got to realize, like, once the data high is hit, then price tends to be pretty, choppy and just slow after, because we've already hit such a good objective, if that makes sense. So I like the pattern here, but I do not like the time. It's way too late. We've already hit the data high, and I don't like how there's almost zero target. You're literally targeting a V-shaped recovery that swept out all this liquidity, so it's not a great play. Also, you can see the 5-minute never end up inversing either. And if you're going to take a 15-minute inverse, you got to make sure the 5-minute is inversing as well. All right, the third setup that I will be going over is this one right here. Okay, one of my students sent this to me a couple weeks ago, and I'm going to go over it. So this setup right here would be a win. You can see that my indicator did alert this setup, which is cool. If you are interested in my indicator, just go check out the description. It's been really helpful to me, especially if you're like at work and not on the charts. If you're on the charts, you probably don't need it, but if you are at work, it has been really helpful. So not a lot of people know this about this kind of setup, but I treat a 930 wick almost the same as a data wick, okay, if it's obvious enough. So I love the 930 wick, and it's not something I talk about a lot, but if we ever get a smart money reversal or a really nice V-shape inverse, and we left like a really nice 930 wicket open, I love those setups, because if we have a 930 wick, that makes me think that this is the Judas swing, which I talked about in my last video, and the signature and price, it was a 4-candle reversal where we go 1, 2, 3, hit London high, death candle down, 4. This 4-candle reversal makes it super nice for me to be convinced that we're going to go hit the 930 wick. Now, if this was any other wick, or maybe it was just 730 too low, I would not be as confident. But I love the 930 wick, especially when it's obvious and it's a liquidity pool I love targeting. Now, this trade, I would have gone break even at this gap here, so you would have gone break even there. Some people would go break even here, but in my opinion, with the confidence in the 930 wick and the confidence of how unfilled this is, I would probably wait a little bit on this setup. But overall, great setup. Would definitely rate this an A+ setup if we were delivering from if ever I got up to the left, because we were in premium and we did sweep liquidity. All right, so for the fourth setup, we have this setup right here. Now, first glance, I don't really love it, okay? But after taking a little closer of a look, it definitely would be an A setup. Okay, so let me just give my thoughts on this. So I like how he formed a gap here. It looks like he's on the 1-minute time frame, and I'm assuming this is probably a 2-minute or maybe a 3-minute, which it's probably better, because it looks like he has his purple zone marked out. I don't think this is light bulb, but I think it's a great mechanical setup, okay? There's just something about this where we pump so much here. We're like, I don't know, unless we like equal lows down here or really good liquidity, I probably would not take something like this. Now, I did take something like this the other day, but it's because we had really obvious equal lows here. And without me seeing that, it's really hard to tell. So, the educational thing here is, what liquidity rests at the bottom? Is it obvious equal lows? If yes, then I would always take a setup like this. If it's not that obvious, not a setup I typically take. Okay, just because we pump so much here and it's 11:30 and it's already after the AM session. And to me, it looks like the AM session expanded here. And taking plays like this, especially after 11, are going to be pretty risky. So you just kind of want to be careful about those. But regardless, it's an A setup. We hit the 50%. It looks like the higher time frame's bearish. But be careful of taking setups like this after the AM session ends, after a giant expansion move. Looks like it worked out, which is cool. I do like how he hit a stop at the swing high. You have to do that in August. I've been starting to do stops at the swing high and low in August, because I keep getting stopped on the close above and below. So, until further notice, that's what I did. But yeah, overall, decent play. Not something I probably would have taken. I think there's better setups than this, but good for him. All right, and last but not least, we have this setup right here, which this setup right here, I definitely do like it, okay? So this setup right here, there's a couple things good about this, and there's a couple things bad about this. The first thing that's bad about this is it's really late in the session. But if you see candles printing like this, and I mean like really nice, like monstrous, like type of candles, that means price action is pretty good. Okay, I love trading when we have candlesticks like this. That's not choppy at all. I like how where he entered, there was an order block as well. Like this is an okay entry, especially after the session because of how the candles look. They're just super like not wicky. They're no doji candles. Like they're super nice momentum. So I definitely do like the look of this. We had a very obvious sell side here, and I know this is from today. This is from the 20th of August, and we did sweep a fair value gap over here, so this would be an A plus setup, and it was super low. And even if we were still bearish, I would expect a retracement here, which is obviously nice. Now I always tell beginners, like, be careful about taking these fair value gaps really far away. Like, this is almost on the other side of the curve, and ideally you want to catch one down here where my mouse is, but there was none. The only reason I like this one, even though it's kind of far, is because one, there's a good break-even point, and two, the close and then the order block got created, which is super nice. I think he could have I think he could have tightened up his stop loss here a little bit, especially with an OB here. I think he could have done like a hard stop right at the bottom of the inverse because ideally the order block should hold. But other than that, I mean, it's a good setup. I like how we have a high inside of a fair value gap, and I like how even though the bias might still be bearish, we kind of really need a retracement here because you can see AM session dump so much. So really nice setup. Probably one of my favorite on the videos or on this video so far. This is a setup I would have probably taken if I once wasn't already done for the day. I actually did catch the shorts at the top on this day, so nice setup and looks like you made money. Now, that's going to be it for this video. The last thing I do want to say is if I don't like a setup and it works, it doesn't mean it's a bad setup. There's some setups I don't think are personally light bulb that you might take. But here's the thing. The beauty of it is I've taught you guys to make your own setups, make your own experiences, have conviction in your own setups. The other day, there's a setup in my stream, and I didn't really love it, but it ended up working for a nice 3-yard play, and a lot of my chat took it. And it might have been a setup I might have taken in a different circumstance. I just wasn't feeling it that day. So the important part is you're learning the signature and price that might work or might not work. It all comes down to your conviction at the end of the day. You should listen to me for some certain extent, but once you kind of listen to me enough, you'll kind of make judgments based off your own experience, which is fine. And yeah, that's obviously the end goal. So that's going to be it for this video. I'll see you guys in the next one. Peace.